Lindsay Schram, taking you from being a home buyer to a homeowner who's confident in their financial future. And right now I'm covering a big topic for what's going on in the marketplace. And I'm doing it because it's needed. Earlier this week, I was talking to someone that I feel fortunate to say trusts me about their financial future. And they reached out to me and said, hey, someone I'm doing business with offered to refinance me, and it's a lower rate, and can you look at it? And she felt uncomfortable with what this lender was telling her. And so I took a look at it and I told her, listen, what they're doing is completely legal, but it is not in your benefit. And I explained the numbers and I explained why. And so the reality is most people who own a home probably don't understand how and when to refinance their current mortgage. So today we are talking about when to refinance your home, how to know when it is worth it to take advantage of refinancing. And to really understand what we're talking about, I thought I'd define what refinancing means, because some of you out there, this might be a completely new term to you. So we want to get it straight from the beginning. Refinancing from the internet says financing again, typically with a new loan. So some people do this with like an auto. They have a car and they already have a loan on it, and maybe rates go lower. So they're like, oh, I'll pay off the current loan with a new loan that has better terms or different terms to it. So that is one example outside of the housing industry of what a refinance could look like. Today, refinancing, we're going to talk about refinancing for the three most common reasons I see people talk to me about refinancing. There's a variety of reasons that a person could look at potentially refinancing, but we typically see three main reasons. And so we're going to cruise through each of those three today, answering how do you know if it's worth it? So the most common reason I hear people tell me, hey, I'm thinking of refinancing right now, is to get a lower interest rate. So refinancing to get that low rate that they're talking about in the media. You might have heard on the news, the Federal Reserve announced that they're going to be lowering interest rates. Those are things that as a home buyer, you kind of start asking yourself questions of, could it be worth it? Maybe I could get a lower payment. Maybe I could end up paying less interest over the time that I have a loan on this house. And those are great questions to be asking. You just want to make sure that when you start reaching out to professionals about what does a low interest rate mean for me specifically, you do something that people don't like doing. You're going to do the math. That's right. I said a 4-letter word on a live video and I didn't bleep it out. Math. Okay, I'll stop belaboring it, but it's true. A lot of people just either don't understand the math between figuring out if taking advantage of a low interest rate is worth it, or it's just a lot of effort, so they don't want to do it. But the reality is if you don't do the math for yourself, you won't know with confidence if your refinance is worth it or not. So there's many different ways to look at the math to determine it. The most common way we walk people through is taking the cost of the refinance. And I don't mean cash due at closing, because you could be paying the cost with cash due at closing, or you could be paying the cost out of your equity. So you're going to get something called a loan estimate. It's going to show your total cost on there. And you're going to take that cost and divide it by the monthly savings to your principal and interest and mortgage insurance and go, where's my break-even point? When have I made enough of the new payments at the lower payment to have saved in the monthly payments what the initial cost was? Where is that break-even point? Now, this isn't the only way to look at it, but it's the first way, because if you find out that for the cost of refinancing, you'd have to live in the home for 8 years, I question whether it's worth it or not. I mean, even if you think you're going to stay in the home for 30 years, Most people's plans change is what I've found in my years of doing this. We had a home that we thought we were going to retire in, and we owned it for 9 years. That's a good long time, but we sold it because life changes, things happen. So make sure you know where that break even is, and you are pretty confident you're going to be in the home past that time. Typical rule of thumb for most loan originators is that the rate has at least a 1% decrease to make refinancing worth it. Now, there are exceptions to that, so it's not a written in stone rule, but it is a great tool that if the rate isn't dropping 1% lower than where you are right now, refinancing just for a lower rate might not be worth it. The other reason that we see people come to us to refinance is so that they can pay off their home loan quicker. Now, an example of this would be if you bought your home with a 30-year mortgage and rates have gone down, your life has changed, and instead of just refinancing into a lower interest rate, you're actually going to refinance into a lower interest rate and a shorter loan term. So that means going from a 30-year to a 15-year. So maybe you're 5 years into your 30-year mortgage, so you have 25 years left, and you want to go to a 15-year because then you'd pay off 10 years earlier. That's 10 years less of interest. Now, the benefit of moving to a shorter time period when rates are down is that the jump in the monthly payment, because you're crunching the time that you get to pay that lump sum of money over, so it wants to increase the payment for you when you go from a 30-year to a 15-year typically. When the rates are really low, it makes that payment jump lessen for you. Now, again, to find out if it's worth it, math. I know you guys hate this video, don't you? And this math is a little more challenging. I actually tend to help our clients with this one because it's just a little bit more challenging. How my team does this for someone is if you are 5 years into a 30-year mortgage, we would take an amortization calculator. So that's something that says, hey, we're just going to spread the 25 years at your current interest rate, at your current balance, and just see how much principal, how much interest you're going to pay before payoff. Now, that's one equation we do. Then we take the difference between the principal and interest you're currently paying and the principal and interest you'd be paying in the 15-year, which is a higher amount. And we say, okay, what if you cap your current mortgage, which has 25 years at this rate, at this balance, and just make extra payments of that gap? How much would you pay until payoff at that point? And then the third equation we do is what we're proposing, which is the new loan balance, the new interest rate, and the new period of time it's going to be spread over. And we look at what would you pay to pay off for that? And really, we're comparing that second math equation that takes into account the extra that you're paying on the third math equation, and we compare them. And then we start talking about, the savings that's in the refinance to the 15-year. Is it worth the risk of the higher payment? Because if you keep your current loan and you just start prepaying it each month, you might pay a little bit more than refinancing to the 15-year, but you have the flexibility of going to a lower payment if something were to happen in your life where your monthly income wasn't the same. And so we start having a very in-depth conversation for these clients and these people, but it is a good conversation to have. The third reason we see people come to us most commonly for refinancing is actually when you want to get your equity and your home equity. Oh, it's starting to go so that you can read it now. I'll talk slower. You want to get your home equity out. So what that means is over the period of owning your house, hopefully it's going up in value, your loan balance is going down. The gap between your loan balance and what it's worth is called equity. And when we refinance to pull that equity out and hand it to you in cash, there tend to be 3 reasons why someone would do that. I'm going to look at my notes so I don't mess this up. One is remodeling. A lot of the homes were built in the 80s, need some updating. That can cost, anywhere from $5,000 to $55,000. And depending on someone's financial picture, that may be something they can just do out of pocket, but it may not be. And so we see a lot of people say, I'm going to pull some of my equity while the rates are down so that I can do some updates to my home, either so I can enjoy it more or just because it's necessary. It's more of a repair than a remodel, or it's going to even increase my home value further so that when I go to sell it down the road, I can get even more cash. So I'm actually building even more equity into my home. Now, the really good question to ask when you're looking at pulling out your equity for the sake of remodeling is there a cheaper way to do it? Refinancing, like we said before, it costs money, and it's actually typically a lot of money. And so you want to make sure that you don't have access to a remodeling loan through a home repair company or through what's called a second mortgage that might have cheaper fees, probably a slightly higher interest rate, but is also something you could pay off quicker. So even though the interest rate is higher, the cheaper fees and the shorter time period to pay it would actually make it cheaper than doing a full-blown refinance. Again, it's a lot of math, trusted professional. That's what you want to help you with that one. Another reason that someone wants to pull equity is to actually invest it in a different thing besides the home that they currently earn. The last time rates went down in the early 2000s, we saw a ton of long-term home owners reaching out and saying, I want to pull my equity out. I want to refinance, pull my equity out, and I'm actually going to go buy my retirement home now, even though I'm not planning on retiring for 5-10 years from now. And I'll just buy it as a second home. I'll go and travel there when I have vacation time. And then when I'm ready to retire down the road, I can move there permanently and sell this property. And they did that because they were reading real estate markets. So it was more of a long-term investment than just a casual buy for them. We've also seen people go and pull it out for a variety of different investments, businesses, and things like that. And when you're looking at that kind of equity pull for refinancing, you have to look at the numbers of the refinance, but what it would cost for you to do it a different way. So how would you access the cash a different way? But the secondary question that you also have to ask is, well, besides possible cost saving benefits, is there emotional benefits for me doing this way right now? So in the case of buying your retirement home while real estate is cheap, that's actually a huge emotional benefit for a lot of people. And that's something you have to weigh in there. And it gets challenging because it's not just a bottom line dollar cost. Great conversations for you to have with yourself, with your lender, and other people who share life with you of, hey, do you think the emotional benefit would be worth it? The third reason that we tend to see people want to pull equity out of their house is actually debt consolidation. So they have a lot of different things going on, and they just want to either lower the monthly outgo by paying off high interest things, or they want to clean up their credit. So they're going to pull some equity out, pay stuff off and down so that they can get their credit score up. Now, my biggest question for anyone when they do this, and this is a hard one, is this a long-term fix? And honestly, if you came into my office and we were talking about this, I probably wouldn't even ask the question because it's kind of a gray area. But because I'm talking to the whole public audience and I'm not pigeonholing someone or discriminating, I can say it here. If you were thinking about doing an equity pull for debt consolidation, is it going to fix what created the problem? For a lot of people, having a debt consolidation actually does fix the problem because the problem was a circumstance that is now gone from their life. So that could be a medical emergency for themselves or for a family member. We've seen deaths in the family, or even long-term illnesses of family or pets. Consolidating for those things tend to fix the problem because it wasn't a lifestyle that created the debt. It was a circumstance that could not have been foreseen that caused the debt. Hard question to ask, but it's a good question to ask when you're thinking about pulling equity from your home. So today we covered 3 reasons that people tend to talk to me about refinancing. We talked about getting a lower interest rate and how you want to make sure that the cost of the refinance to get the lower rate is worth the savings, and that you typically would want to look for at least a 1% reduction in your interest rate to make it worth it. The second reason we talked about was shortening the period of time in which you're paying loan in hopes to reduce the amount of interest that you would pay over it, and that you'd want to do a couple amortization calculator equations to make sure it's worth it. And the third reason we discussed today was for pulling equity. And there's a lot of different reasons to look at doing. And that's where you really want to have a conversation with a trusted professional who's willing to talk it out with you and not just say, of course we can do that for you, and of course it's worth it. They're actually going to take the time to explain it to you. So if you've been wondering this question of, is refinancing worth it for me? I just don't know. I hear things, and you are wanting a free quote. We're only licensed in certain states, so if we can't help you, we'll try and get you connected. But go ahead and send my team an email and just put in the subject line what you're seeing right down there, which is refinance quote. And we're going to send you an email back with just a few questions that would help us do a general quote for you. It's not a guarantee because you're not doing a full application, but it gives you an idea of, hey, do we think this might be a good thing for us to do right now, whether it's for lowering an interest rate or reducing the time period you're paying or accessing equity in your home. I hope this has been helpful to you, home buyers and home owners, and creates confidence for you in home ownership. As always, if there's anything my team can do for you, never hesitate to reach out and call us or send us a message.